I am a fellow of AFFP given by the Frankfurt School and TDRI. My research project is on how climate change adaptation linkage with the stock market, especially working on the adaptation finance in perspective of the stock market price and risk return related to the plantation companies in perspective of Malaysia. So the objectives of my research, there are few objectives. One is how climate change adjusted with the stock market risk premium for the plantation companies. We know plantations and agro farms are directly linked with the climate change. Due to the climatic impacts, the productions level decreases. So companies try to adjust at the physical level, infrastructures and seed growings or motivations to the farmer. That's the ground level. And then next step, they try to adjust at the practical business level or accounting levels. They need to pay more insurance payments or more interest rate or more risk premiums, and also need to keep some extra reserve requirement for uncertainty. And the third stage, company, because these are the public listed companies, so they need to adjust in the stock market. And the stock market investors expect every relevant to the returns and risks. So they expect extra return based on the extra risks that's imposed due to the climate change. So my first objective is working on the how investors get the risk return relationships and what is their expectations and what is their understanding about climate change. And based on that, we also and then we make survey among the investors individual levels and understand their expectations. Later on, we also test the value data linked with the El Nino and flood in Malaysia, and then how it's impacting in the beta of relevant stocks and the risk premiums and the dividend issues. So if we expect that if investors take extra risks, they expect extra return. So in that cases, if the return maybe come from the price gain or come from the capital gain. So if the investors cannot get return from the price differentiate, they're supposed to expect the return from the dividend yield. So we test how they get the return based on the stock change price changes or based on the dividend. So the overall findings of this study said that El Nino is a long period phenomena, and we cannot measure based on the event study. So we did not find actually any conclusion based on the El Nino impact on stock market price. But we get the compensation based on the dividend yield. So we found that companies give the extra dividend at the time of El Nino. That means investors get the assurance or extra premium due to the climate change or El Nino issues, particularly in case of Malaysian plantation companies. This study has some policy implications based on few groups of people. Suppose the business people or the company perspective, they understand how they can give their risk premium for the climate change and what types of expectation investors want from them based on the climatic issues. And opposite side, the investors also get the idea that how companies or business give the risk premium or how they adjust their risks. And in case of the policy makers get the idea that climate is also issues that should be adjusted in the stock market, especially the policy makers in the stock market, those who are trying to improve the market quality or those who make the market more sustainable market. In that cases, they can link the climatic variables in the market efficiency theories. I'm very much thankful to AFFP and TDRI for giving me fund and scope for doing this research. I hope this research will open my scope for doing some more analysis or more extra research in this area, or finding some more fund or developing new concept on climate change and the financial issues. That means climate change adaptation in different perspectives. That's all. Thank you.